So what do you anticipate stablecoins will do for your business?
I think there's a lot of promise there. And it's going to be really interesting. Clearly, we've got a regulatory regime that is very pro-crypto, very pro-stablecoin. Something is going to happen here imminently, and there's no sort of stopping that. As a bank, some of what we look at is how are consumers going to respond to this? Mm-hmm. Are we going to get widespread adoption of this? Is it going to be the kind of engaged folks that are already in the crypto space? Or is this something that's going to go and become kind of mainstream and much broader than just the crypto folks today? You talk about stablecoin, and that implies stability.
Right.
But some of the questions that we have and that we're watching is there's obviously a lot of opportunity for this to create instability in the banking system, and so how will that play out? Fundamentally, banks are in the business of lending money.
Yes.
And in order to lend money, we take deposits.
Right.
We take those deposits and we turn them into loans. So, imagine a world where stable coins become mainstream and consumers are perhaps holding their assets not in US dollars, in bank deposits, but maybe they're holding those in a stable coin with a tech company that's now issued that, or a top 10 bank.
Which, by the way, if they hold it with a tech company, that is not FDIC insured.
Correct. The entire regulation that we've seen so far that's proposed and not passed actually explicitly clarifies that there's not FDIC insurance on these assets.
Right.
But imagine, is a consumer going to understand that?
Probably not.
Think about USD stablecoin. And am I going to understand that that's not really FDIC insured? It sounds like a US dollar. It looks like a US dollar, smells like a US dollar. If I can pay with my phone at a point of sale in a purchase that's denominated in dollars, do I really know anything different?
Right. Yeah, and there are all kinds of rules about you can't advertise that something is FDIC insured if it is not guaranteed, if it's not held in an FDIC member institution. They have regulatory supervisory actions against that all the time. So I wonder what that will mean. Maybe they'll come up with rules about what you can call a stable coin. You can call it pizzazz coin, but you can't call it dollar coin, for instance.
Yeah, I worry about the proximity, and consumer confusion around that. And then I think, we go through cycles. And so when you're in a period of relative stability, you forget about the importance of FDIC insurance. Certainly pre-2023, we had been in a very stable banking environment for quite some time. And so, people weren't thinking about FDIC insurance limits. They hadn't really given that a lot of thought since maybe 2010.
Well, there was also the whole issue of the Synapse bankruptcy last year, which has nothing to do with crypto at all, or stablecoins, or payments. But it really did bring to the fore the precariousness of a lot of bank fintech partnerships.
Yeah.
I think there were a lot of banks that may not have realized, or certainly there were a lot of customers that did not realize exactly what was going on, and the fact that it was all kind of held together by string and chewing gum. And there definitely was not a consumer understanding in the mass market that if you have money in one of these, quote, accounts, it is not actually a bank account in your name.
Absolutely. I think the other thing that example really shows is it just takes a while for these products to mature. And so undoubtedly there's a lot of promise with stablecoin and with tokenized deposits. But it's going to take us some time to learn what some of the risks and the stopgaps are, to harden risk processes and governance processes. And so, I do have some concern that over the next few years, as those processes get hardened, if we see really rapid, widespread adoption of this, we may end up learning some very painful and costly lessons as a result. So I think it's just a matter of really good risk and governance frameworks, really thinking through this. And then I think we should be clear on who this is for.
Who is it for?
Right. If you look at this, we banks today can tokenize US dollar deposits in their traditional form. You don't need a stablecoin to do that. In fact, Zions participated in a proof of concept around a regulated settlement network with SIFNA and a number of large banks that completed earlier this year and published a white paper.
We wrote about that.
And that white paper basically showed that within the existing regulatory framework and the technology that we have available today, you can tokenize deposits and securities and use those to create real-time settlement using blockchain technology without actually needing crypto or a stablecoin per se. And so what I haven't heard a really clear response on yet, and I'm sort of trying to understand myself, is what do people see as truly the benefit of a stablecoin versus simply tokenized deposits? And if you ask yourself that question and you say, well, who is it for? I mean, the main difference is the participants, right? And so stablecoins take this outside of the banking network and open this up much more broadly. And so you got to ask yourself the question, is this coming from consumers, or is this coming from a handful of people, from criminal enterprises, right? And from those that really stand to benefit from those kinds of changes?